If you've ever opened a chart and noticed your reactions were no longer the same, no fear, no greed, just observation, then this isn't for the crowd. It's for those who've lost enough money to start seeing the market differently. One day, markets were bleeding red from Asia to Europe. US stocks broke down within minutes of the open. The dollar surged hard, then quickly collapsed. Gold spiked violently, but couldn't hold and was sold off just as fast. Bitcoin dropped more than 7% in less than half an hour. Millions of traders silently watched their accounts evaporate. In the middle of that chaos, I was still sitting in front of my screen, calm. Not because I was better than anyone else, but because I had been waiting for this day for a very long time. I knew the market would crash, not because I could predict the future, but because I understood one thing that very few people pay attention to. Markets don't crash because of bad news. They crash because people react the wrong way to bad news. Most traders fixate on the headlines. I don't. I watch how the crowd reacts to those headlines. I remember it clearly. A week before the crash, gold started behaving strangely. Bad news was released, but price barely moved. The next day, CPI came in higher than expected, and the market went up anyway. I sat there, writing line after line in my old notebook. When bad news appears and price no longer reacts negatively, that can be a sign of the final breakdown. I call it the silence before the storm. And I know this, when everything becomes too quiet, that's usually when a big move is being prepared. I started building my plan, marking key price levels, observing market psychology instead of trying to predict direction. I waited for reactions, not forecasts. And then the day came. Charts collapsed. Exchanges started issuing margin calls. People around me rushed in to catch the bottom, then panicked. I didn't panic. I did only one thing. I placed my order at the exact moment fear was at its peak. Because I understand one thing. When the crowd runs, that's when those who understand the game step in. Not because of luck, not because of genius, but because of preparation. Because of understanding the market one step deeper. And because of a strategy forged over many years. You can win a few trades by luck, but if you want to survive a real crash, you need a plan. In this podcast, I'll share that plan with you, step by step. So next time, when the market turns chaotic, you won't be dragged along. You'll be able to stay calm, place your trades, and take profits while most are still holding on in pain. The market is like the ocean. On the surface, all you see are waves. But what truly decides whether you survive or sink are the undercurrents you can't see with the naked eye. I used to be someone who only watched the waves, chasing the market, burning accounts, without knowing why. Until, after hitting bottom again and again, I began to learn how to listen. To listen to the market's whispers, and to listen to the fear hidden behind every rally. Listening even to the rush inside my own breathing. And then I realized the market itself is not that complex. It's just that we are often not calm enough to truly understand it. There are lessons you won't find in any book. There are moments that only those who have nearly been pulled under by the market can truly feel. Those moments are what shaped who I am today. I believe you've been there too. Maybe you're holding a deep losing position. Maybe you've just escaped a brutal reversal. Or maybe you're moving up, yet still feel that something is missing, something hard to name. If you're still here, still listening to this podcast, I want to tell you one thing. Thank you. Thank you for walking alongside me through this time. I'm not perfect. I've failed. I've collapsed. I've doubted myself. But your presence, through honest comments, direct feedback, and even silent support, is the reason I keep making this podcast, keep making these videos, with all the sincerity and everything I've lived through. And because of that, I'm preparing a special gift. Something I believe will help you see the market from a different angle, deeper, clearer, and solid enough to make decisions while others are still panicking. I don't want to say too much yet, but if you've made it this far, maybe you're meant to receive it early. So, if you haven't subscribed, hit subscribe and turn on notifications. When that gift appears, you'll want to be the first to see it. I won't promise to make you rich overnight, but I will walk with you through every battle, every undercurrent, and every market crash, so that, in the end, you don't just survive, but become far more grounded than before. Before the market crashes, it doesn't scream, it whispers. It doesn't send clear signals telling you to get out. It only leaves behind a few very small, very subtle signs, and only those who are quiet enough, deep enough, and experienced enough will notice them. I want to share with you 3 hidden signals, 3 things most beginners tend to overlook, but those who understand the game quietly observe every day. The first signal is the market's out-of-sync reaction to news. This is often the starting point of major crashes, when the market no longer reacts according to normal logic, when bad news appears and price doesn't fall, or good news is released but price doesn't rise. Don't celebrate too quickly. Start paying attention, because this may be a sign of quiet accumulation or a false push taking place beneath the surface. And while you still believe everything is back to normal, those who truly steer the market have already prepared their next move. I call it abnormal silence. Whenever I see it, I don't rush into a trade. I observe. I wait. I wait for a crack in crowd psychology. The second signal is the silent shift of large capital flows. Smart money is never loud.
Large capital doesn't rush in loudly. It withdraws slowly. It leaves behind candles with shrinking volume, weak pullbacks, long periods of sideways movement before the storm truly arrives. If you watch long enough, you'll notice that before every major crash, large capital usually exits stocks that have already run hard, gradually pulls away from risky assets, and quietly shifts towards safer havens. But they don't accumulate in ways that are easy to see. They don't buy gold when it breaks out spectacularly. They buy it when gold looks weak, when it moves sideways, when it makes you bored and impatient. They enter when almost no one is paying attention. If you observe gold or the dollar index, you'll notice that before every major crash, there is always a phase where gold doesn't rise, but doesn't fall either. A very strange calm, a false sense of drowsiness, and then everything explodes. The third signal is the collective expression of the crowd. The market has psychology, and each trader is just a single cell within that massive emotional body. I don't just look at charts, I observe forums, I listen to YouTube, I read comments. I look at the market through the eyes of a psychology researcher. When you see most channels start saying a new trend has formed, when traders fully return, signal groups are packed, and people begin ignoring stop losses to hold positions long term, that's when I place my hands on the keyboard and prepare for a counter-trend trade. Not because I enjoy going against the crowd, but because I understand this. Collective psychology is the most easily manipulated thing in the market, and the one who controls it is the last one still standing. I want you to start building this habit. Write down how the market reacts after every major piece of news. Track the relationship between gold, the dollar, and equities. Learn to feel the crowd's breathing through words, through charts, and even through silence. Because the market never lies, it just doesn't speak directly. And if you listen closely enough, you'll realize this: every crash leaves an echo long before it happens. There is something strange I've learned after many years of trading. The market doesn't crash when you're waiting for it to crash, and it doesn't rise when you're most confident. The elite understand this very well. They don't try to predict direction. They observe how the market fails to behave as expected, and from that misalignment, they see the truth. If you only look at charts, you see waves. If you follow capital flows, you see movement. But if you understand psychology, you see scenarios being set up, pump traps, false breakouts, sudden crashes that in reality were prepared days in advance. And if you're still trading on emotion, on green and red signals, pause for a moment and listen carefully to this. I'm about to say something. If you're a day trader, it may make you see the market in a completely different way. If you truly want to live from trading, not for a few months, but for many years, start today with one very specific action. Split your account into two. Not a demo account and a live account, not a USD account and a crypto account. I'm talking about a practical operating structure that I've personally used. One account is for scalping, short trades, fast reactions, high speed, and another account, completely different, used to behave like someone who waits. The first account is where you train your hands, train your rhythm, train your psychology, like a fighter warming up before stepping into the ring. There you learn how to react, but you don't allow it to shape your larger thinking. The second account is the silent account. In that account, you don't trade every day. You don't enter trades because you have free time. You don't click just because the market is moving. In that mode, there is no emotion, no impatience, no unnecessary action. Only four things: observe, analyze, confirm, and wait for the crowd to make mistakes. When they panic sell, you enter. When they FOMO into breakouts, you quietly step away. You're not loud, but you're always on time. I know this might sound unusual, but this separation is what saves you from psychological chaos. It allows you to stay clear-headed when one account is bleeding because the other is waiting for a very large opportunity. I've lived through many crashes using this structure, and if you want to go the long road, you also need two people inside you. One flexible, quick, able to react, and one cold, unforgiving, able to wait. You will be both. You react when needed, and you stay still when staying still is required. That is the true nature of a real trader. Next, I'll share with you how I build the plan for that silent account, entry by entry, how I scale in, how I protect capital, and how I increase exposure while the crowd still doesn't understand what is happening. Take a deep breath. The next part is something many people have paid for with years and a great deal of money before figuring it out themselves. How to enter trades in the middle of chaos, and how to maintain a steel mindset while the entire market is on fire. When the market burns, the weak look for the close button, the panicked look for the add button, but those who understand the game look for the biggest entry of their lives. A mentor told me something, and to this day, I still keep it with me.
Never ask the market whether you should enter now. Let the market tell you on its own that this is the moment. What does that mean? It means you don't enter trades because of a feeling, not because you like it, not because someone says this setup looks good. You enter only when the market leaves behind a very clear sequence of signs. Wrong reactions, misaligned psychology, and traces of capital flow that are being hidden. I'll tell you how I enter trades in the middle of chaos, step by step. Not a secret technique, just habits for survival. First step, I don't look at price. I look at reactions after the news. The news itself is not important. The market's reaction after the news is the compass. For example, CPI comes in higher than expected. The crowd believes gold should fall, the USD should rise. But if gold doesn't fall, if it even holds price stubbornly, That's an out-of-sync reaction. I don't enter immediately. I observe 3 to 4 candles after the news. If price starts moving in a tight range, volatility contracts, liquidity dries up, I know one thing: the weak side is slowly losing confidence. Next, I ask myself one question: who is under pressure? You might ask, how do you know who's trapped? The answer is simple. When the market makes a breakout but fails to continue, then reverses sharply, that's when those who just entered in the breakout direction begin to panic. I call that a reflex trap, like jumping over a fence only for the fence to collapse right onto you. At that point, I still don't enter. I wait for a confirmation candle. The market must reject the old direction and establish a new control structure. Only then do I act. I enter like an assassin. I enter only when 2 things appear together. First, price reacts against the news. Second, market structure shows a psychological final blow. I don't go in big immediately. I place a small order first, a probing strike. If the market moves as expected, I scale in piece by piece. I never go all in from the start, because I don't trade extremes. I trade positioning. As for stop loss, I place it like someone who intends to stay in the game. I don't place it too tight. I don't hide it either. I place my stop where, if it's hit, I'm willing to admit that I was wrong. And if the stop is truly hit, I don't delete the chart. I go back and observe again. I ask myself, is the market reacting correctly, or is it trying to make me believe that it is? Many times, those very stop-outs open up another opportunity, clearer, deeper, more precise. As for taking profit, I don't do what most people do. I don't hold until the gain is huge, but I also don't exit early the moment I see green. I divide my position into 3 parts. One part exits early to cover costs. One part rides the trend, and one part trails the stop along the waves, letting the market tell me on its own, this is enough. I don't need every trade to be a massive win. I only need one thing from every trade: a clear reason for entering. And every exit must be a deliberate decision. You see, trading in chaos is not some advanced technique. It's preparation. It's understanding that the market doesn't need you to win, but you can still survive if you stand on the right side. In the market, the one who loses is not the one who analyzes incorrectly. It's the one who is no longer clear-headed enough to correct mistakes in time. I've seen too many traders with solid systems, clear strategies, still blow up their accounts just because of one sleepless morning, one impulsive afternoon of revenge trading, one long evening staring at the screen, forgetting where they actually stand in this game. So if you want to go the long road, remember this: trading is not a competition of techniques. It's a game of energy and awareness. Whoever maintains a more stable state of mind wins in the long run. I've changed almost my entire lifestyle for one purpose only: to keep my mind cold enough when the market gets rough. I don't wake up early to show productivity. I wake up at the right time, so my mind isn't foggy when decisions need to be made. I don't sit in front of the screen 12 hours a day. I observe at the right moments, and I step away when the market has nothing left to say. I design my day like an assassin. In the morning, I don't read the news. I take 10 minutes to sit still, drink warm water, and write down the emotions I'm feeling. Because emotions are always the first signal telling you whether today is a day to trade or not. At noon, I don't place trades. I walk. I detach from the market so I don't get pulled into small fluctuations that distort bigger thinking. In the afternoon, I check the market again. If nothing is off, I rest. If something is off, I set traps. At that moment, I trade not because the market is moving, but because I clearly see a crash or a trap being prepared. I turn off all phone notifications. I leave signal groups. I don't need noise. When I enter a trade, it's no longer just an action. It's a ritual. I don't click in a rush. I confirm. And after confirmation, I don't stare at the chart. I let the market do its part, and I continue living. It sounds simple, but I paid for this way of living many times before earning it. I've lost sleep over a deeply negative position. I've lost entire holidays holding trades against the trend. I've been at the gym with my mind stuck on a support level that had just been broken. And then I understood, to survive long-term, you have to live differently. I don't drink alcohol before major news days. I don't eat too much before the US session. I don't go to sleep while my mind is still tangled in a losing trade. I train myself to live a way of life where every action points towards clarity. Because only clarity allows you to see what others miss, and only clarity, maintained day after day, gives me the strength to stand firm while thousands of others are losing control.